The stock of Tata Motors has come to a screeching halt in today's trading session after moving up for 11 straight sessions. You saw the automotive major slam the brakes as far as its upward trajectory is concerned. In fact, this morning you had JP Morgan as well come out with a note maintaining their underweight rating on this particular company and the stock. The target price they've given is 170 rupees a piece, and through this note, essentially what they've tried to do is capture as well as measure the Tesla fever. What's the entire buzz all about? Well, the stock, as we all know, it has rallied 30% in the last few sessions on speculations of a Tesla partnership, which of course the company has categorically denied for now, but it also reiterated that the PV business restructuring is not yet finalized. However, the analysts at JP Morgan have said it is tough to interpret this and attribute value to an event which can be binary. However, they do admit that it could mean a massive strategic leap on the electric journey and shift the valuation paradigm for the stock of Tata Motors, but it hasn't yet happened, and if at all we know anything so far is the fact that the company has gone on record and denied this particular partnership with Tesla. The analysts at JP Morgan said they also will be looking forward to a development if and when that happens. The recent investor discussions on Tata Motors, according to them, have shifted towards assessing the case for imputing high multiples for the PV business, given the turnaround, share gains and the electric story. That's something that everybody on the street has also been talking about and lauding as well. JP Morgan has essentially presented a simple valuation sensitivity for the PV business for Tata Motors as well. They've benchmarked it to traditional OEMs, and in that light, they believe the stock is already trading at the top end of valuations on EV to sales, despite the low profitability. However, markets could remain exuberant, they believe, because unless there's full clarity on the Tesla story that emerges, given elevated comps for new mobility companies. So that continues to be a big question mark, a bit of an overhang, I would say, for JP Morgan and for the stock as well in a big way. But of course, it has still seen a solid run up on back of that speculation of a tie-up with Tesla. So it still lacks clarity. There's a credible EV and all-inclusive strategy already in the making from Tata Motors, given the affordable EV products, their focus on B2C to B2B. They're looking to create an entire ecosystem along with the group companies like Tata Motors, Tata Power, Tata Chemical for cells, Autocomp for the battery pack, as well as for Chroma. So they are finding and setting up an entire ecosystem for the EV push. Well, as far as the Tesla fever is concerned, an alliance will definitely create a highly differentiable model and lead on technology, but the specifics will be critical to attribute value at this juncture. So therefore, the analysts at JP Morgan continue to have some reservations about all of this buzz and the PV business and its prospects going forward. They maintain their underweight stance. The target price that they've given is 170 rupees a piece. We saw Tata Motors reacting quite poorly today. It was down more than 6% by the time the markets shut shop, putting a halt to a stellar run-up.